Welcome to Silver Heist. Thank you to our returning subscribers and guests. The best laid plans of mice and men often go awry. So here's a chart of the S&P 500 going up for 11 years straight. And so I started to think that I wanted to get some of my retirement money out of the stock market, and started doing that a little bit in December and I think late January or February, and then some even later. I may not have gotten enough out and early enough. So I got some out, but maybe not as much as I could have or should have. I just got a shareholder report from one of my mutual funds. So this is retirement money. So I don't want to pick on them particularly, but this is something I just got today, and this is their commentary of their financials and some insight that they're putting into the market for 2020. So this is sort of funny. So I'm going to just obscure their name so that we can read some of it. So, introduction, starting the 20s with a roar. In absolute terms, 2019 was an excellent year with stocks, corporate bonds, gold, and oil all up double digits. This contrasted sharply with 2018, when virtually every asset class declined as a result of a growth scare reminiscent of those in 2011 and 2015. Economic growth in the U.S. indeed slowed but remained above 2%. As it turns out, the 2010s was the first decade in U.S. history without a recession and home to the longest bull market on record. Life in the political realm has remained more volatile. While Brexit and U.S. trade deals appear on a path to resolution, President Trump faces impeachment, and the coming election is sure to keep 2020 interesting. From here, the economy and the markets figure to grind higher, albeit the latter at a muted pace. So that's what they're thinking. But what's most interesting to me is that their chief investment officer appears at a prestigious roundtable each year and talks about stocks. And so this was on January 25th, 2020, this event was held. I'm going to show what they were talking about on this date. I'm going to quickly show you a thumbnail of a video I published the day before. I was one of the first people to be demonetized for talking about the coronavirus. But here is what he's got to say. And I've redacted the names. Head of its parent firm is a Wall Street legend for good reason. He's a shrewd thematic investor with a love of deals, an eye for steals, and encyclopedic knowledge of multiple businesses and the people who built them. So this is what caught my eye right off the bat. How many picks do you have for us this year? Well, I've got 9. First of all, I'm back to baseball. Liberty Braves. The stock is $29.30 with 60 million shares and a $1.8 billion market value. The team finished with a 97-65 record last season, so they've done well on the field. Secondly, Major League Baseball examining the minor league ownership rules, which should increase the value of the A, AA, and AAA teams. The third point is betting, which is going to keep the eyeballs focused on the game, meaning more advertising and more money for the league. In addition to that, they've got a brand new ballpark. What could the stock be worth? I won't sell for less than 42. All right, let's see what Major League Baseball team might be worth. There may not even be a baseball season this summer. Liberty Braves, 29. I won't sell for less than 42. It's now going for $13, down 54%. Ouch. What's your second favorite sport? It's basketball. The Madison Square Garden Company. It closed at $300 per share with under 24 million shares and $1 billion in net cash. So wow, that looks exciting. The Knicks have an enviable record, unlikely to be surpassed. Forbes values the team at over $4 billion. What about the spun-off entertainment businesses? Live entertainment and live tours are popular and profitable. Madison Square Garden is a leading live entertainment venue operation. Well, it was, but unfortunately, public gatherings in New York City are now no longer occurring. So here it is. It's down here. Let me show you. Madison Square Garden was selling for $299, now for $206, down 31%. So you just don't know what's coming. And so I wish I just got out a little earlier and maybe a little more out. But I'm still in, so what can you do? So let's look at a couple of the other picks. Pivot to talking about El Segundo California Defense Company, Aerojet Rocketdyne. They make liquid fuel, solid fuel, air-breathing, and electric propulsion engines, so the things that make rockets and missiles go up. The Pentagon will have a budget this year of $758 billion, up from $741. So defense industry. So Rocketdyne, only down 18%. Okay, that's doing a little better. Let's bring it back to Earth. Fox Corporation. So Fox had sold their entertainment assets to Walt Disney, so maybe they're more about Fox News and publishing. So let's see where Fox is at. Fox is down from 36 to 21. They're down 40%. So this I got off a stock picker. I don't know if there's any dividends in between here, but this is the share price then. This is the share price now. This one is something else. What about another recent media merger and acquisition story? CBS Viacom. So CBS Viacom. Holy smokes. Their movie studio, Paramount, has 3,700 movie titles and 140,000 episodes in their content library, and they have the NFL. Well, that's assuming the NFL plays games this year. So CBS, $45, now down to $16, down 63%. Oh my God. All right, so here's an idea. Orange, Connecticut-based Avangrid trades at 50. They have a regulated utility business and their $10 billion rate base is growing, so we'll have a tailwind to earnings and a rising dividend. Second part is renewable business, in which they're a major factor in solar and wind. So a utility business, that's a little more conservative. So Avangrid is only down 8%. So there you have a snapshot of some of the exuberance this stock picker had going into the calendar year. And so he thought 10 years of growth, it's just going to keep going forever. I started to think I should get out a little, but I didn't think I should get out a lot. So let me show you some things. Here's the Dow Jones. Here's a 3-month view of the Dow Jones. So this is about the peak, February 20th maybe. Let's say February 19th. So the Dow is down 31% since February 19th. So that's like 30 days. Let's look at the S&P. Let's shoot for the 19th again. So there's the 19th. So it's down 28. Now, I don't have a fancy tool to show you gold, so I'm going to use GLD as a substitute for gold. So gold is less bad. So in the same month, it's down 9% instead of 29 or 33%. So gold is less bad than the greater Wall Street market. But silver, February 19th, right almost the peak of silver, almost as bad, a little worse than the stock market. So silver is really down with the market, because the market, Wall Street, is reflecting the value of future economic growth, and silver is tied to that economic activity and is down, where gold is tied more to its safe harbor status. So silver is not seen as money right now. It could change, but right now silver is down. And so now look at what I'm doing. I have some gold, I have silver, I'm stacking cash, and I'm stacking provisions. And here I am buying something I've never had before. All I knew is that it looked like powdered milk. I don't know how to speak Spanish. Fortificada. And I'm like, what is clim? And only when I got home did I figure out that clim is milk. So there's all kinds of stuff that, so you had ideas literally 60 days ago that are not operable. So remain agile. Even though the stock market is so down, think about whether you should sell or hold. And so I'm not a financial planner or a disaster expert. Do what you need to do to protect your family. Tonight, we actually gave some toilet paper to an individual in need. Protect your immediate family. Think about other people. So you got to make your own decisions. Have you heard about the New York City bank branch that ran out of $100 one day? If you'd like to learn more, please click on one of our featured videos.